What's happening, crypto fam? You're tuned in to the Elite Wealth Podcast, where we unlock the secrets of crushing it in the Web3 and cryptocurrency space. I'm Tyler Brewer, alongside the co-host Garrison Raleigh. And since 2016, we've been educating, enriching, and empowering hundreds of students across the globe on how to make waves and create generational wealth in this space.
Each episode, Tyler and I keep it real with you, analyzing the top market movers and industry leaders, the latest news, and how to avoid the potholes on the road to crypto riches. We're industry vets who have guided students over 500% gains in this wild 2024 market.
If you're a rookie crypto trader or a seasoned investor, you're in the right hands. We will teach you how to level up your mindset and skills to really capitalize on this decentralized revolution.
Subscribe now and join us every week as we lead you step by step into elite digital wealth with the Elite Wealth Podcast.
What's up, guys? In this episode, we're diving deep into the world of cryptocurrency investing for beginners. And think of this as learning to swim, but in the digital financial ocean, where we're going to teach you how to stay afloat, avoid the sharks, and maybe even catch some waves. What's up, Garrison? How you doing, brother?
It's going good. It's going good. I got a new mic here. As you guys can tell, I don't have the headset on anymore, which I still might put it on here and there. I kind of like it, but let me know if there's any technical difficulties, and then we'll get it fixed right away, Tyler. But
nah, bro, you're sounding loud and clear, man. Loud and clear.
Yeah, I'll go ahead and start off with this disclaimer, I guess. I mean, today we are going to kind of be doing this is episode 8 now. It is now July 1st, 2024. We are recording episode 8, and disclaimer, Elite Wealth Strategies does not provide financial advice, and our content is for informational purposes only. Always consult a qualified financial professional before making investment decisions. We are not responsible for any financial losses resulting from the use of our information.
Perfect. And yeah, just because we're going over really getting started with crypto, we want to make sure that we get that disclaimer out there. But there's a lot of things as a beginner that are really important to understand. A lot of different things, from safely buying, from storing, understanding different crypto wallets. You want to know the difference of the hardware, the software, the researching projects, what to buy, right? Do you want to buy this project? Why would you want to buy the project? And really risk management in crypto investing. So again, those are mostly what we're going to cover today, but they're really, really important. So starting off with really safely buying, selling, and storing cryptocurrencies. Guys, imagine cryptocurrency, specifically Bitcoin, is digital gold. Just like you wouldn't leave your digital gold lying around, you need some secure methods to make sure you can buy, sell, and store all your digital assets. And just to start it off with, guys, there's multiple ways you can store it. Garrison, if you want to go over a couple different ways you can store crypto, from kind of the wide aspect, bro, go ahead and dive into that.
Yeah, of course. There's a lot of different ways to buy cryptocurrency, and in this video we'll make sure you know how, like we said. But also, one other quick disclaimer: we are not going to be partnered with any of these projects we're talking about. Like I said, this is all informational. This is just kind of stuff we've seen and used in the space. So again, we are not partnered with any of these, but when it goes to like cryptocurrency exchanges, kind of where you're buying, a lot of crypto, there's some cryptos that you can't buy from there, but you got to, do some other stuff to get it. But you're going to want to make sure you compare exchanges, figure out what works best for you. Choosing an exchange is like picking a bank. Now, Tyler could be using whatever bank. Say he's using Wells Fargo by him, and there's not a Wells Fargo by me. So why, I'm not going to use that bank. So I'm going to use, maybe First Standard Bank is close, or whatever it is. And then, I choose that bank because it's close, it's convenient, and
maybe they don't even operate around here, right? I don't even have First Standard. And same with some of these crypto exchanges too. Some of them you can't use in certain states. Some have different regulations. There's a lot of different things to consider when with these exchanges. And Garrison named one bank. I don't know. I've never even seen that one around me. Well, same with like the Coinbase US, right? You can't. A lot of outside countries outside the US, they're not using Coinbase. They're using other places, or my goodness, other exchanges like Kraken or Binance. But Um, yeah, like Coinbase is kind of a little more user friendly, I would say. I don't really like a lot of the other ones. I've used quite a few. I don't know if Garrison, you have a preference of which one your favorite is, but I
Yeah,
like Coinbase personally. I don't know about
I
you.
I personally use Coinbase as well. It's easiest for, it feels easiest. It's most onboarding friendly, I feel like, because it kind of teaches you how to set up your wallet and how to set up your account. The other ones, I feel like they just kind of throw you in the fire and it's like good
Yeah, bro.
luck.
They're confusing. And I honestly even sometimes like when they update their platform, Coinbase, like even for me, like a seasoned investor, I feel like I'm like, what in the heck? How do I sell this? How do I convert this to here? How do I so sometimes it's confusing for me even. And I could understand like if you're a brand new investor or brand
Exactly.
new to crypto, it could be hard, it could be tough, which is why we've created this podcast and our Discord and an ebook to really help guide you get started. But yeah, I like Coinbase, bro. I personally use it. I've always used it. Some of the other ones I've had problems trying to use. Kraken, I don't think works where I'm at. Maybe it does, maybe it doesn't. But there's again, it just depends because each one's going to be a little bit different. You're gonna want to do your research. We're not going to name all of them, but you're going to want to research into them. Like the fees.
Yeah.
There's different factors like security. Is it insured? Most of it's probably not going to be. But and personally, right? I don't keep my crypto on an exchange. I just use the exchange to buy and sell. That's it. And
Yeah.
mostly just buy.
Yeah, exactly. A lot of us are still, hodling, they call it. Um, but no, 100% like you you got to do your research on these exchanges because if it's a small exchange or maybe they don't have a good backing or good support and they crash, like FTX for example, you could go on to, Etherscan and you could have seen some of these transactions that they were moving, maybe they were moving it to US dollar, which, sometimes that's needed for legal fees and things like that. But, you want to see these founders and projects be transparent about that. If they're
Yeah.
not and you're seeing transactions that aren't being explained, that's a red flag. You know,
Yeah.
you
A big
you
thing now is sorry to cut you off, Kirsten,
no,
but a
you're
big
good.
thing now is like the proof of funds, right? Remember
Yeah.
before FTX, that reminded me before FTX, we there was no proof of funds. We didn't have like that wasn't a big thing because there's proof of stake, proof of work, proof of everything. But then there was proof of funds when FTX went under. People realized like, oh wow, we kind of just trusted that they had the money. Luckily, I don't think either one of us were affected by that because we don't store our money on exchanges. Exchanges are specifically for exchanging
Yeah.
and buying, right? But yeah, the proof of funds thing I think was even a cool time too because it made you realize like how similar still these crypto platforms were operating like a fractional reserve banking, right? If we all just went to the bank and tried to take our money from the bank, the same thing would have happened with any bank as it would have with FTX. Pretty much what happened with FTX is a bank run. Everybody went there, tried to get their crypto, and they actually didn't have everything they said they did. Um, but yeah, man, I think like you said, a lot of things to keep in mind, right? Coinbase definitely a little bit simpler to operate. There's other ones too, but again, you're gonna want to do your research on those ones. We can't give you an exact one to use because again, we're not financial advisors and we're not partnered with any of them either. So, do your research. What you got to see what works best in your area. But that leads us actually into the next thing is kind of security as well because um is it right? We're talking about where we're storing it. Is it safer on the exchange or in your hands? Well, it depends. Do you know what you're doing? Do you understand the difference between hot and cold storage or different wallets? Well, we're going to explain them to you, but if you don't, maybe keeping it on Coinbase is temporarily a better option because they're going to keep it a little more secure for you. So, Garrison, I don't know if you want to cover a couple security things, maybe like something you have in mind.
No, yeah, I can jump in. Yeah, like you said, I think exchanges are more for short-term holdings and maybe if you don't plan on holding, or maybe if you only plan on holding for like, 30 to 60 days. Um, but yeah, I'm a big fan of like hot and cold storage and I know Tyler, well, I'm more of a fan of cold storage. So if exchanges are like banks, your wallets are going to be your personal safes. Like at home, people have safes, they're keeping cash in there, gold in there, you're going to want to keep it secure. So we'll help you choose the right one for your needs. And, hot versus cold storage. Hot wallets are like carrying cash in your pocket. It's convenient, but it's riskier. Cold storage is like a safety deposit box or a safe in your house, or, I've seen people hide it in all kinds of places in their house. So,
Right.
and how many wallets is there? You could use, a lot of people have probably, Tyler, I don't know how many wallets I have anymore, but it's a good like probably
Oh
10
gosh.
wallets.
Yeah, bro.
Like,
I mean, I'm sure I have quite a bit. And what's crazy too, I think, is because we're in such a digital age now, right? Digital money, digital this, digital that. Food's almost digital at this point.
yeah,
Um, like it's funny because the one thing you don't want to do is store these passwords in a digital place. Um, you want to keep everything mostly on paper, or if there's some cool things that Ledger has. I think Garrison, you have it. The little metal thing. It's kind of
yeah,
like
it's
a
in my,
coding, they
it's,
kind of create their own little, like, I guess, language, and you have to decode the password is the best way I could describe it.
yeah, I actually buried it in my yard. So, hopefully nobody knows where that's at. Uh, no, I'm
Hey,
just
bro, I'm
kidding.
gonna
I
come over.
actually,
Can I come over? I just want to hang out. What time do
no,
you
I
usually go to
actually
bed?
have it in unknown location. I forgot where it's at. So, um, so hot storage wallets, those are going to be more connected to the internet, and they're going to be more convenient for frequent trading. A lot of them can connect to better, like saying you're trying to swap to a meme coin. A lot of meme coins you cannot buy on exchanges, so you're going to have to use, third party exchanges or decentralized exchanges to swap into those. And that it's going to be a higher risk of hacking or theft with those. So you got to be careful and understand and make sure you're using ones that have been, notably verified before, like Uniswap safe. I've used Pancake Swap a lot, and those seem to be pretty safe. But again, things can change, so make sure you're always kind of, doing research as time goes. Maybe if you haven't used an exchange in 6 7 months, maybe you should do some research, make sure things haven't changed before you jump back into it. So yeah, those are going to be more like I said, online, connected to the internet, mobile apps. A lot of them, you can have a MetaMask on your phone, or it's, a lot of times desktop software. It's not going to be like a USB device, which, Tyler, if you want to go in a cold storage wallet,
Yeah,
you can
bro.
do that.
Yeah, and I want to talk about too a couple things like passwords. Passwords is such a big thing because,
Yeah,
again,
for
if you're
sure.
in control of your money, if you're the one keeping it safe, don't save your passwords. You know what's crazy is there's a word for it, but it's like pretty much we outsource our memory to our phones. How many times, bro, do you really type in a password other than for crypto, right? Most people just use their Face ID.
I do a
I think a
lot.
big thing people are going to start doing, and something I've implemented, is I started deleting all my passwords. Most of us out, we don't even remember our parents' phone number. I remember as a kid, bro, I could call any one of my friends up at any given point. Like, dude, I could call their house phone, the mom would answer, and you could talk to them. Nowadays, people are scared to go outside.
Right.
But that's a different conversation, right? We're talking about remembering your password. You want to be able to remember that. And we have the ability to. Our brains are awesome. We're immaculate creations. Honestly, whatever you believe in, we're really intricate creations, and we can utilize our memory, our brain, to remember a lot of this stuff. You don't have to remember the whole seed phrase. Don't challenge yourself to do that. Maybe you do. But stop storing your passwords on your phone. Stop storing passwords digitally. If you don't want it to get hacked, don't store the password on your phone. Remember it yourself. It's super easy, actually. The more I do it, the more, dude, I have like 30 passwords that I use like often, from like my day-to-day work to, logging into Google to this to that, bro. It's so easy. But I used to always get confused because I was outsourcing that information. But one thing I want to talk about, like I said, was the fact of digitally storing your passwords is not a good concept, especially when it comes to being in control of your money. Because if you're using those
Yeah.
same passwords for everything, all they have to do is hack your Gmail, right? And that's where lack of security comes into play, because most people are like, oh, well, I didn't have my seed phrase. Yeah, but you had your password saved. They didn't need your seed phrase. They hacked your phone. They hacked your this.
You got your
They SIM
data.
swapped you. So you got to be really careful, especially if you're in control. This is where understanding, and again, we don't want to scare you, but I want you to understand there's little small things that you could do to keep yourself safe. Now, Garrison covered the hot storage wallets, which again, it's more like a what's in your pocket, right? If you're going to the grocery store, you're not bringing your entire bank account to the grocery store. You're not bringing your whole entire bank account. You're bringing maybe your debit card that allows you to swipe or do a transaction, right? Or allows it to take a certain amount out. So, or you're bringing cash, which a lot of people don't do anymore. But hot storage is, again, connected to the internet, more convenient for frequent stuff, higher risk of hacking or theft, right? If I go to the store with all cash, somebody could just rob me and steal the cash. If they have my debit card, like all I have to do is cancel my debit card, and they're like, okay, you got my card. But a cold storage wallet, which is a lot more secure, it's usually not connected to the internet, and it shouldn't ever be, but it has the ability to be most secure. And this is where, like, I actually heard Michael Saylor talk about this the other day. Because we're always like, oh, you don't want to keep your money on these exchanges, but the thing is we trust companies all the time. It's not that you don't want to keep your money on the exchange. You want to have someone you trust to hold your money, right? Because at the bank, right, we trust our bank to use our money every day. We trust our phone company to do whatever they're doing. We trust a lot of different companies on a day-to-day basis to help us. So it's not necessarily because a big thing, right? We said the proof of funds, a big thing was not your keys, not your coins, which to an extent is true. But also keep in mind that we want to have a trustless system. If they're operating off of coding and simple, if they have the proof of funds and you can see how they're operating and they're very transparent, why would you not trust them, right? So we trust companies every day. I think that's a big thing that right now, and a lot of people might disagree with me, especially who are already in the crypto space. They might disagree with that, which is okay. But it's one of those things too, where I'm kind of coming to terms with, well, yeah, we do trust companies actually, right? We kind of trust a lot of companies and places to do things for us on a day-to-day basis versus like the crypto community. We're like, not your keys, not your coin, trust nobody, trust no coin, trust no company, which I think a lot of us came maybe from a hurt place of being done bad, and we found out what the system really is, right? In our first 7 episodes, we really break down what money is, fiat, this, that, and the other. So sorry for straying away from this, Garrison, but I feel like a lot of this is important too for an early investor because
100%.
they don't know a lot. But so the main differences you're going to see between a cold and hot wallet is the cold wallet is going to be way more secure. It's going to be like a hardware, usually kind of like, or a paper wallet. It's going to be some type of, it's actually in my drawer over here, but like a ledger, right? You'll have a ledger that Garrison's got on the screen. If you're listening, it's just like a USB plugin. But yeah, the cold storage is going to be way more secure, especially if it's not connected to the internet or you don't connect it. But it's going to be less convenient for transactions, right? You're going to carry around in your hot storage, your hot wallet, what you want to transact with daily, or what if you were walking in the streets and you had $100 and you're like, I don't care if I lose $100. Well, maybe that's what you carry in your hot wallet. But yeah, the key differences are those ones I just covered. But that leads us into the different types, because there's hardware and software wallets. And Garrison, if you want to dive into that one, because I've been yapping for a minute, need a little drink.
For sure. Yeah, no. So hardware wallets, what is it? It's going to be, like Tyler just said, a ledger, some sort of device. Like Tyler said, usually it's a USB. Like there's actually some luxury hardware wallets out there that are, you can drop some money on them if you want, but that's more of just like a flex. It's not anything you need, and I'm not even sure
Right.
how secure those are. I'd have to do some more research. But a lot of times you want to store these private keys offline, like Tyler said. Write it down, guys. It takes the maximum amount of words you're going to write down is 24 words, and then your password. That's pretty easy. It takes maybe 5 to 10 minutes to be safe, to save your money, to save, if your phone gets hacked and someone gets into it. People know what crypto is now. People know what ledger, if you write ledger, what the password is and your 24-word recovery phrase. People are going to know where they can go put that in nowadays.
And dude,
Especially
smartphones are so much. Yeah, bro. Smartphones are so much different now. You can literally search for items you can go to your pictures and search like dogs, and it'll pull up every picture of a dog. Like you could literally search words, notes, and or book, and it'll pull up things like whatever you want. So people think like, oh yeah, like no, I'm never gonna get hacked, I'm never gonna get scammed, blah blah blah. Well, that's right when you do, right? You want to make sure you're always being secure, always test your wallets.
Yeah.
But yeah, man, there's so
Yeah,
many
before
different
you go
things.
and send 100K to yourself, test maybe $5 first.
Yeah, bro, for real, for
Um,
real.
so yeah, a lot of times hardware wallets are going to be more secure, like we've said. I know this is kind of the same thing, but still, like it's a different term. So you guys are going to want to know this stuff. They usually require a purchase of a device. Like these ledgers, they don't just hand these out at Burcott's or Burcott's. They don't just hand these out at Walmart and are like, here you guys go for free.
All right,
Hey,
Publix ain't
I
handing them
have your
out.
24 recovery phrase.
If they start to, that's when you need to be a little cautious.
Yeah, I would not take one. But yeah, no, you can
Yeah.
buy one like a Ledger or a Trezor's another device. I've heard
And
good
make
things about
sure the
them as
phishing
well.
websites, bro. Make sure it's off their official website. You don't
Correct.
want to have some type of phishing website. Make sure you are on their official website, not some, don't get it off Amazon. Wherever you're buying it, make sure you're on their official website, whatever hardware wallet you're getting.
And my
Make sure
my
it's
favorite
secure.
thing to my favorite thing to do with that is go on to X or Twitter and search them up, and you can make sure you find that golden check mark because it's going to
Yep.
verify that it's their actual account. Click their links there. That's going to be your best way to find the correct links, and because sometimes it can be dangerous typing it in even. So
Yeah,
you're going
bro.
to want to make sure you're on the right links.
It's crazy you said that because X has become a place of like truth and trust where
Yeah,
you can go and do things like that. Because bro, I do the same thing. Like if I'm looking for a project or NFT project or token, like I go to
Twitter
their
first.
page, I look for them on X first, and then I click the links on their page. Isn't it crazy how like a simple accountability factor, right? Holding people accountable on the internet. Thank you, Elon Musk. It gives you that trust factor. And also allowing the free speech too, right? Allowing these companies to have fun, do what they want, say what they want. But also in the flip side, right? You gotta weed out the people you don't want to have around, the bad energy.
So yeah, so software wallets are going to be the other thing. It's basically the same thing as a hot wallet. Applications on computers. You usually kind of store those private keys on your device, which again is not always the smartest, but they are typically on there already and more vulnerable to malware or hacking. Like we said, those are going to be your hot wallet where you're not going to keep too much in it. Kind of, more the burner wallet or a test fund to test things. Um, and don't be afraid to make multiple software wallets. Maybe you use one that has nothing in it to connect to websites first to double check. And that's more
Yep.
of a burner wallet. The one you have money isn't going to be, obviously you don't want to lose everything that's in there. So be smart with what you're doing and connecting to. And you guys already know the key differences to these. Again, hardware wallets generally offer the better protection. Software wallets are going to be more convenient. There's going to be the I guess the downside to hardware wallets is there is an upfront cost, and but it's not too much. To get a ledger, it's like $70. To be safe, I'd rather do that than lose, however much money you have.
Yep.
And it's going to be a lot easier to recover your hardware wallets,
Yep.
and because you have those, typically have those seed phrases or private keys, which is what we'll get into now. So these are like the secret code to your safe. We're going to explain why they're crucial and how to protect them, which we kind of already did explain how to protect them. If you lose these, it's like losing the key to the safe. You're not going to get in it again, especially if you forget that password. But sometimes there's updates on these hardware devices where they do require you to have those seed phrases. And so, private keys, Tyler, what's a private key?
Yeah, man. So we've mentioned a couple different things. There's a private key, seed phrases, a public key. You're gonna want to know the difference because you don't want to give somebody your private key. Your private key is really gonna it's a unique cryptographic code that is gives like if I wanted Garrison to access my MetaMask right now, I could send him a private key and he could just copy and paste it in his MetaMask and add my account to it, and it's boom, just like that. So only you have access to that. Now, again, it acts like a digital signature for transactions, and you don't want to tell people this. You don't want to share it with people. It's stored within your wallet. So you can actually get this from within your wallet. It's not like something you need to write down. You can actually just go in, like right now, I could go in my MetaMask, copy it, and send it to Garrison. And it's usually a long string of like alphanumeric characters. So it's numbers, letters, kind of all mixed. And it's, I don't even know what like the typical length is of it, but
Yeah.
yeah, these are used to recover, and well, not the private key specifically, but the seed phrase is used to recover the wallet. Now, private key again is more like giving Garrison access. It's like giving him a quick login to my account. Otherwise, if I could give him the seed phrase and he could actually kind of do the same thing. Now, the seed phrase though is, you know, you never want to share these with other people, or unless it's like a business partner, somebody you're in business with, you don't want to share this stuff with just anybody. You don't want to share with
It's like your mom or your
nobody
dad,
actually. Yeah,
maybe,
maybe your
maybe,
family. You know,
especially if
put
you
it in your
trust them,
will. You know, don't
or
put the
not
actual thing in
especially,
there.
only if you trust them. Sorry to cut you off.
Yeah, right. Not everybody trusts their family, bro. But
Right.
yeah, seed phrase is usually about 12 to 24 words. And that represents the private key realistically. The seed phrase is going to allow you to import import that wallet anywhere pretty much. The private key is going to allow Garrison to have access. Now, the public key is like your public address, right? If Garrison wanted to send me mail, he could just look up my address, see if it's public information, or I could just tell him my address if he wants to send me mail. The public
Yeah.
key is what you give other people. Seed phrase and the private key, you don't want to share that with people. The public key is pretty much like how you receive cryptocurrency, even for yourself. And there's going to be different addresses for different tokens, right? Different networks, and we might have dove into that a little bit into the past, but if you don't know that much already, we'll definitely break it down in probably another video where we break down the networks and you know, the different types of addresses and things like that. So really the key points is both private and seed phrase provide access to your cryptocurrency. The seed phrase can generate multiple private keys. The loss of either means potential loss. So of both the seed and the private but these should be secured offline. You don't want them digital. And the public key again is more like it's safe to share. It's your public address. If Garrison wants to send me a package or gift, feel free to, Garrison. He just has to send it to my address. But yeah, we've covered a lot of security practices too. And really it's like, how do you learn what to invest in? What do you want to invest in? And for me, understanding what money is that we broke down in the first couple episodes, I mostly buy Bitcoin. Now, there's other things to look at when you're investing because we're going to break that down in number 4. But how do you figure out what to buy? How do you research a project? Garrison, you want to cover a little bit on this one?
Yeah, I'll jump in and then I'm gonna backtrack for 1 second. Say
Yeah.
you were, traveling and maybe you had this in your check-on bag and they lost your luggage and maybe you couldn't get it back, or somehow maybe your dog chewed it up or something, maybe you lost it or
Yeah.
rolled, whatever. That recovery phrase, those 24 words, that's gonna get you back into your wallet, especially if you lost it. So that's where that's gonna come in key, very key. But yeah, so we'll go to researching crypto projects. I always recommend starting at CoinGecko. All these things that we're gonna go over, you'll be able to find on CoinGecko. So not all that's wow. Not all that glitters is gold, and not all cryptocurrencies are worth investing in. So always keep that in mind. Not just because John from down the street told you to buy it doesn't mean you should buy it. So first we're gonna go over things like market cap, trading volume, real world use cases, and it's like, when you're assessing a company before buying a stock or something. So these are going to be some equations. Make sure you guys have your notebooks. I hope you guys have been taking notes. But to get the market cap of the project, you take the current price times the circulating supply.
And Garrison, maybe why would you want to know this stuff? You know, what for the listener listening, why do you want to know the stuff you're about to explain? The tokenomics, what we would call.
Yeah, so yeah, let me break that down actually really quick. So we went over the Bitcoin white paper last time, and again, that's sort of like the business plan and the tokenomics, and as the projects, it's like a demand or supply. So tokenomics, a term unique to the cryptocurrency space, refers to economic model of a token or cryptocurrency project, and it encompasses the supply and demand dynamics that influence a token's value. Tokens are digital units on a blockchain with various use cases, including, security, utility, governance functions, and, there's other things that they could be doing with them. Each token has a predetermined issuance schedule, whether through mining or programmed release. So the core tokenomics lies in understanding of supply and demand. So if you understand supply and demand, well, this might, click for you very easily. Every crypto and NFT project has a circulating supply, whether it's 100 NFTs or 100 coins or 100 million coins. It's possible there's some, that have a lot of tokens and dilution, which isn't always, it's kind of a red flag sometimes. And the scarcity principle obviously is going to make more people want it. Like Bitcoin, there's only 21 million. So it has a potential for its value to increase. And this is going to be crucial for, all NFTs and crypto, because if you go in and you're going to do the research on this stuff, you're going to see, you're going to want the market cap. Market cap's not always important, I guess, especially when it comes to NFTs. But when you're looking at coins, you're going to want a strong market cap, because you're going to want something backing it. They have something behind it and a lot of people investing in it. Sometimes there's only, 500 NFTs in a collection, and that's usually those are going to be the riskier ones. So there's going to be a max supply, which obviously that's the max number of coins or NFTs that's going to be, released or printed. And you don't want that to be too much, in my opinion.
Facts. Bitcoin's 21 million.
Yeah, and then there's going to be a total supply, the max number of coins that are created, which that could
Currently,
be
so
the
like
current. Yeah.
So like for Bitcoin, right? Not all Bitcoins are mined. So there's an amount that would still be I want to say like just shy of 18 or 19 million, maybe it is, of total Bitcoin in circulation right now, which is the circulating supply. But right now there's only a total number of however many, even though the max supply says there could be there's 21 million for sure.
Yeah, and again, so like Tyler said, there's going to be that total supply, and then what's circulating in the current market, what's being traded, there's some Bitcoin that's been lost. That's not going to be counted in the circulating supply. So, fully diluted value, that's going to be your market cap times max supply. If market cap times if max supply was reached, and the total value locked. That's pretty simple too. We've gone over, staking, lending, and yield farming before in other episodes. That's going to be what's locked up into those protocols. And again, you can see a lot of that on DeFiLlama.com. And how much volume does it have? Is there a lot of how long is it? How much is being traded? Is there any liquidity even in the project anymore? If no one's buying an NFT for the last 6 months, is that going to be an NFT you want to buy? Or is that because there's none listed because everybody wants to hold them? But if there's a bunch listed and nobody's buying them, it's probably not really the best NFT you want to buy, unless you're, wanted to buy a lottery ticket and rather would buy an NFT. That's more of a lottery ticket. So yeah, that's going to be the tokenomics end of it. And a lot of these things, like I said, you don't even need to know these specific equations I gave you. CoinGecko will pretty much just label them right there for you and tell you what it is. It'll even tell you how to get it on CoinGecko if you forget. But Tyler, is there anything you wanted to cover for tokenomics or white papers?
No, not necessarily, bro. I don't know if you want to hit the red flags, brief over some red flags quickly for either one of them, or if you want to dive right into the risk management, we can wrap it up there.
Yeah, let's go into some. We kind of did hit some red flags, but for red flags for cryptocurrency and NFT projects, this can go for both. if the supply is in trillions, you're never going to see a trillion supply NFT, hopefully. um, if there's massive supply in the trillions, that means there's not a lot of value to it. There's almost unlimited. Are people going to want it? Why is there so many? If there's low trading volume, like I said, if there's, too much venture capitalist money into it or early investors, because that means that they could just sell it right as it drops and, make a lot of money, but it crashes on a lot of people at the same time. So, if the market cap's under, 10 million, it can be risky until they prove themselves. If it's a proven project that, maybe they just don't have the $10 million market cap, it wouldn't be a bad investment. Just again, you're going to want to make sure they prove themselves. If you see influencers or celebrities or people you follow on social media all pump in a specific meme coin or something, that's usually a red flag. I've never seen it. I don't think there's yet to be an influencer or celebrity that's dropped a coin that hasn't rugged.
Right.
But
Yeah, bro. And with NFTs, a lot of those red flags are going to be the same.
yeah,
Like and you want to be careful because a lot of these, again, think about it, like everybody wants to build a clothing brand, and why is their clothing brand better than the other? Why is this better than that? A lot of them are going to promise some type of passive income, the communities, the utility. What do you get when you buy the NFT? They're gonna want to build a game, right? They have zero experience, something like that. But there's gonna be a lot of hype and excitement, and they're gonna utilize words around that to really create that hype and the FOMO potentially. But for the most part, yeah, a lot of those red flags that you're gonna see for projects are gonna be pretty similar for NFTs. And I know Garrison probably has a lot more that he's listed in the Discord. And if you guys haven't already, make sure you join the Discord. We have an awesome ebook in there as well. The last thing I want to cover real quick to wrap it up here is risk management. Now, there's a big thing. We could really deep dive into this, but we don't have too much time left here. So I want to wrap it up. First thing I would recommend, there's an amazing video on YouTube by Patrick Bet-David. It's the 20 Rules of Money. I highly suggest you go and watch it, study it, understand it, because what I'm going to break down to you, he breaks down in a more detailed manner. Now, risk management with crypto, again, everybody's risk is going to be different. The crypto market's really unpredictable and for the most part, unless it's Bitcoin. For the rest of it, it's pretty unpredictable. So everyone's, again, risk is going to be a little bit different because we have a different time horizon and risk tolerance. Now, the time horizon is going to be, well, if I'm 50 or 60, I don't want to risk as much money because maybe I'm retired and I don't have, I'm set, I'm good. I just want to buy Bitcoin. I don't want to risk anything else in any of these other tokens. I just want to buy Bitcoin, hold Bitcoin to really retain wealth and beat the cost of capital. Now, again, 20 Rules of Money by Patrick Bet-David is going to be the best video for this, but I do want to cover this since this is for the beginner. Diversification strategies. Now, a lot of people try to diversify too early on. And guys, it's a doubles game. This is a doubles game. Making money is a game. It's a sport. You have to understand the rules, out of bounds, right? If it was basketball, you need to know out of bounds, what traveling, double dribbling is. You need to understand the rules. Making money is a sport, and you need to understand taxes, the rules, everything along the lines. Now, diversification is more important when you have a lot more money. Early on, if you got $100, why would I put $10 here, $10 there, $10 here, $10, right? You're better off, again, none of this is financial advice, but you're better off putting all 100 in one place because it's a doubles game. If you started with $1,000, it would all you need to do is double it 10 times and you're at $1 million. It's a game, right? How do you double it 10 times? And when you're at 128,000, right, double number 7, you're not going to be playing the same game you were at double number 2, which is 4K. You're going to be playing a different game, different strategy, different rules, different type of holding, because again, your risk is going to be slightly different. Do you really want to risk all 128,000 on number 7 versus risking your $100 in the beginning? So setting realistic goals is going to be another thing you're going to want to do. Set goals, achievable goals, targets. Guys, we're going to break a lot of this down inside the Discord. Dealing with volatility, a lot of people are going to say volatility is not good, but it is. It comes with the plus size. But guys, we're going to wrap it up here. If you want to learn more, click the link down below, join the Discord, join us for the next episode in the podcast. We have an ebook. Check out our website. We'll see you next time. Thanks for tuning in. Thanks for listening. Peace out, guys.